Chip Dellinger here, Blue Reef Agri Marketing. I want to talk about some long-term structural issues that are happening underneath the surface in the soybean market worldwide that affects U.S. producers here. First and foremost, we've had a nice run-up in the bean market here on some hope, some optimism over a Chinese trade agreement that allegedly has been agreed upon by China and the United States here recently. Soybeans have recently moved up about $1.25 a bushel just in the last 4 or 5 weeks, leading up to these most recent Chinese and U.S. trade talks, as well as after the release of the official agreement about a week and a half ago here. So we've added about $1.20, $1.30 to soybean prices on the futures market. Nice rally here. You're getting U.S. producers maybe a little bit optimistic, potentially a little overly optimistic, allegedly, about the continuation or the follow-through by China on this trade deal. First and foremost, it's not inked. It's not signed at all. It's still going to be a few weeks out. But in principle, there was an agreement that China's going to purchase, not ship out, but just purchase 12 million metric tons of soybeans in calendar year 2025. So they have a short amount of time to do that, just a couple month window here to purchase 12 million metric tons of soybeans. And then thereafter, they are having to agree to have purchased 25 million metric tons of soybeans per calendar year over the next 3 years, 26, 27, and 28. Now, there's first and foremost a lot of variance and interpretation to that, because you have to take into account not only are we talking about calendar year on the agreement, but marketing year. Crop marketing year is different than a calendar year for our U.S. row crops, right? It starts the 1st of September, ends the end of August. So theoretically, China next year in 2026, calendar year 2026, could make major purchases of U.S. beans, but it could be not the 26 crop, it could be the 26 crop a year out. So there's a lot of room for interpretation on this agreement. There's a lot of room for whether they follow through earlier or later in this agreement. And we have to understand also that when it comes to contracts, China takes a different approach culturally than the United States does. When we enter into a contract with someone, the terms are laid out, A, B, C, D, and the United States and many other countries across the world, we sign the agreement, sign the contract, and both sides are expected to live up with what is inside of that contract. Now, the Chinese culture for hundreds, if not thousands of years, functions differently. They abide by contracts, they'll make the agreement, but their expectation is going forward, that is just the initial understanding that we're going to work together. These are the initial terms, but they fully expect to renegotiate those terms down the road. Almost always, almost in every circumstance. So whatever is agreed upon today, don't expect that China is going to fulfill that agreement in the future. Secondly, Brazilian beans. We're going to talk about the structural changes in Brazil as well. I want to hit on that. Brazil is undermining and underpriced relative to U.S. beans. They have become the major Goliath bean producer in the world very quietly over the last 15 to 20 years. They've overtaken United States production. So first and foremost, we caution against getting too overly bulled up on this recent announcement of the Chinese trade agreement and Chinese purchases of U.S. beans. It could happen. Certainly, we could go higher in the futures. I'm not saying that. We could approach $12, $12.50 if China does follow through and purchase a few beans from the United States here over the coming weeks and months. That's not what I'm saying here. But what I'm saying is it's probably not a situation that we look back or look to say, hey, this is the salvation for the U.S. farmer. We're going to be in profitability for the next couple of years because of China. They're still going to buy where it's the cheapest. And right now, and probably for foreseeable future, it's going to be South America and led by Brazil. China's made billions and billions of dollars, hundreds of billions of dollars, likely investments in Brazil, in infrastructure, in road improvement, in rail improvement, in barge and ocean terminal improvement, in structures. And so China fully intends over the coming decades to have Brazil be one of, if not their major supplier of beans going forward. It's just crystal clear. Let's talk about that for a minute in the case of Brazil. What are we looking at here? Well, they're going to their field right now. So as I record this, it's now our late fall going into winter here. We're finishing up with harvest in the United States, and it's the opposite season in the southern hemisphere, particularly Brazil. Right now, they're going to the field. They're about a third done with planting, and right now they've had ideal planting conditions, no weather problems, ample rainfall. Their planting progress is right on pace with what their average 5-year pace has been. So right now, there's no problems. What are they expected to produce down there? Let's just talk about the sheer size of the potential crop out of Brazil. They're expected to increase their planted acreage by around 3%. It equates to about 121 million acres of beans to be planted in Brazil. Compare that to where we're at in the United States. Typically, we're in the 80 to low 80 to 85 million acre total planted in the United States year on year. So they have dwarfed what we plant here, planting 120 plus million acres expected for this coming growing season. Production-wise, they're on pace the last couple of years. They grow as big, if not slightly bigger, national average yield in Brazil as we do here in the United States. So they not only have caught our production, they have surpassed us to some extent. But if you just figure in average production potential in Brazil, you're talking about a potential crop size that is 6.5 billion, maybe on the low side, could approach somewhere towards 6.8, 6.9 billion bushels total. Put that in perspective. Our typical crop size here the last few years in the United States has been somewhere around 4.4 to 4.5 billion bushels. So you're talking about 2.5 billion bushels potentially bigger bean production and supplies 6 to 9 months out as what it relates to what we just produced here in the United States. This isn't something that's a one-off, one-year big crop. Their acreage has continued to grow from 1 to 3% almost since they started planting beans down there more than 20 years ago, probably going on 30 years ago now. It's expected they still could continue to bring new land into production. 70, 80 million acres are sitting idle right now by a lot of estimates that they could, over time, continue to slowly bring into production out of Brazil. And so that is something that is long-term definitely going to affect the world supply situation in beans. And as U.S. producers, we better get used to that. We better get ready for that. It doesn't mean we can't have profitability. It doesn't mean that we cannot, compete with Brazil. But it is a big change than what we've been used to over the last 10, 15 years, as we've seen a lot of profitability at times in our prices and our price structure here. So a couple things just to review. This most recent trade agreement with China, agreeing to purchase some United States beans, both in the short run and over the next 3 years. Be a little bit cautious of that. I'm not saying that can't happen. It certainly can, but the tonnages, the amounts they purchase, the timing of those purchases could be very different than what the market thinks right now. And longer term, if Brazil continues to produce a big crop down in the southern hemisphere over the next 6 months without any major weather problems or production shortfalls, then China is going to be the go-to what the low-cost provider is, and that's going to be the southern hemisphere led by Brazil. So just keep that in the back of our minds here. Don't get too bulled up longer term. If we do continue to push these beans higher, build it into your marketing plan. Think about where we're at for the 25 production. Think about where we're at for new crop, the 26 production. That's north of $11 as well. And so producers need to be thinking longer term and rethinking how we have thought about Brazil for the long haul. Right now, they're the world leader. We're not the leader anymore in producing soybeans. We kind of lost our market share. Can blame that on many different reasons and causes over the last 2 or 3 decades. But the reality is we are the world's second provider of beans, worst case provider. Brazil will continue to be where everyone goes in the world as their cheapest, lowest cost provider, assuming they continue to raise these big crops, and they could be massive. Any questions, don't hesitate to reach out. Look at the link down below. Shoot me an email. Be happy to chat with you. Thank you very much.